In today's Property Insider Chat, Dr. Andrew Wilson and I discuss the latest My Housing Market statistics for the end of August, which show strong but very fragmented property markets around Australia. We're also going to give you a bit of an update on inflation and what that means for interest rates. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Believe it or not, we're now heading into spring. Where's the year gone? And despite all the challenges thrown at them, our housing markets have now increased over 15 of the past 16 months. But as the years progressed, our markets have become more fragmented, with some cities strongly outperforming others. Not only have house prices risen, so have rents. Now, while earlier this year commentators forecast interest rates would fall by the middle of the year, despite monthly inflation coming in a little lower just this week for the month of July, interest rates are really still likely to remain at current levels for some time. So in today's Property Insider Chat with Australia's leading housing economist, Dr. Andrew Wilson, I want to discuss details of his latest house price market report to understand what's happening around Australia in our housing markets. Hi, Andrew.
Yes, good day, Michael. We've just released our My Housing Market's latest August quarter house price and unit price report, and a bit of the same old, really, in terms of the capital city breakdowns. As you mentioned, we're still seeing that quite clear fragmentation, really sort of a three-speed market. But the national house price now up 18 of the past 19 months, up by the same margin over the August quarter compared to the July quarter as the previous result, which was the July quarter versus the June quarter, and that's up by 0.4% over that monthly quarterly change. New national median price, this of course is a weighted average based on the activity in each of the capitals, so it does favour the larger capital cities of Sydney, Melbourne and Brisbane, but the new national median is $1,147.15. And that's up by now 7.8%, Michael, over the past year. So some good results there, annual results for homeowners, with the national house price starting to push towards a 10% annual increase, and up by 12% over the past 2 years, which of course includes the weaker period we had as interest rates increased for the first time in 10 years back in 2022. And as I mentioned, when we look at the capital city breakdowns, it has a very familiar look to it. Again, Perth was the top capital city performer over the quarter, up by 1.7%. So that's the August quarter versus the July quarter. Adelaide next up 1.5%, and Brisbane up 1.1%. And then we get to the sort of the middle range, which was Sydney up by just 0.2%. But the other capital cities had lower prices. Melbourne down marginally by 0.3%, but the smaller capitals, Hobart, Canberra and Darwin, were certainly down by larger margins. Hobart down 1%, Canberra down 1.8%, and Darwin down 2.7% over the month. And we really do see the disparity between the capital city results when we look at the annual results, Michael. Certainly Perth, Adelaide and Brisbane have cleared out with annual house prices very strong. Perth up 27.4% house prices over the year of ending the August quarter. Adelaide up 17.9%, and Perth now is a clear leader of that top band. Adelaide up 17.9 and Brisbane up 16.3. So strong results there for those capitals continuing. Sydney up a reasonable 6.2% over the year as well. So some positive results there for the Sydney market continuing. The other capitals' annual house prices are lower. Hobart down by 0.3%. Melbourne just sliding backwards a bit, down by 1.4%. Canberra down 2.7%. And Darwin annual prices down by 6.2%. But that Darwin market, because of small observation numbers, tends to be volatile from month to month, quarter to quarter. We also saw national unit prices rising by the same amount, 0.4% over the August quarter compared to the July quarter, Michael. And that followed a fall of 0.3% over the previous quarter. So national unit prices bouncing back, and the new national median weighted average price is 657,968 for a unit. And national unit prices also up 6.3% over the year ending the August quarter. A little bit a similar result when we look at the breakdown of the capital city markets, Michael. Most capital cities reported higher unit prices over August, with the exception of Melbourne, which was down just slightly by 0.1%. Canberra down 0.3%, Darwin down 1.3%. The top performer was Hobart, which was up by 4.4%. A small unit market in Hobart, so we do get some volatile results from month to month. Perth was up 1.5%, Adelaide up 1.4%, Sydney and Brisbane were each higher by 0.4%. Similar to houses, Perth, Brisbane and Adelaide leading the charge in terms of annual unit prices ending the August quarter. Perth again up 28.6%, Adelaide up 24.7%, and Brisbane up 19.3%. Even though we've seen strong growth in Perth and Adelaide, we've still got to recognise that they are small unit markets, but nonetheless the annual results are certainly profound. But the Brisbane unit market is a significant market. It certainly has significant activity levels, and that's been a strong result over the past year. 24.7% Brisbane units have increased annually. City units similar to houses, a little bit lower, up by 4.4%. Adelaide up 1%, and Melbourne up by just 0.9%. Canberra and Darwin, however, continue to record lower annual unit prices. Canberra down 1.3%, and Darwin down 1.9%. So a bit of a same old feel to the market, Michael. Probably no real trends emerging other than a continuance of that very strong Adelaide, Brisbane and Perth results. Sydney, moving along quite reasonably. Melbourne flattish at the moment, but the smaller capitals have underperformed. But I think if we look, get the crystal ball out, look to the future, as you said, winter's now gone. Can you believe it? We're now into the spring selling season. We've seen some good results over the past few weekends in terms of preempting the spring selling season. We're seeing higher surge in listing numbers, particularly in Melbourne and Sydney, Michael. And clearance rates have held up as well. So that means that sales numbers are still quite high. So this is a good preview to that spring selling season, particularly for Melbourne and Sydney. And we've got to understand that Melbourne and Sydney are activated through the spring season because they have a significant prestige market, and prestige buyers and sellers tend to be up and about during spring. And we're already seeing that with recent auction clearance rate results, with the lower north and the northern beaches in Sydney picking up their clearance rates over the last couple of weekends. And the inner east and the inner south, Michael, in Melbourne, which have certainly been part of the reason that Melbourne market's been a sideways mover, has been, relative inactivity in those inner suburban prestige markets. But some better results there over the last couple of weekends. So I think that will add to perhaps some continuance in prices growth and maybe a pickup in that Melbourne market, given more activity through the spring era. And look, the other point, I think that if we look at some of those economic indicators, they've improved recently, and I think that they'll still continue to support support housing market activity going forward.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, Andrew, the latest CPI figures came in a couple of days ago, and the CPI dropped to 3.5%, falling from 3.8% in June. But the annual trimmed mean inflation, the one that the Reserve Bank's a little bit more interested in, that smooths out the impact of the temporary, the irregular price changes. That came in at 3.8% from in July as well. But the sense is it's not a green light for rate cuts yet, is it?
I think that's still, highly fanciful, Michael. Even if the US do end up cutting rates in September, which is now, of course, being predicted, but we've had hysterical predictions of rate cuts in the US for the best part of 12 months. So whether that happens or not, regardless, I don't think that it's going to have an impact on Australia because our interest rates, our official rates, are actually lower than the US rates. So even if they cut, they'll still be ahead of ours. But our inflation rate is well ahead of the US inflation rate. So, but yeah, look, it's good news on underlying inflation. That is the target for the Reserve Bank. They use underlying inflation as their measure. The target, of course, is between 2 to 3%. The Reserve Bank governor has said that they need to have a consistent period within that target range, that they are looking at the quarterly CPI data rather than the monthly CPI data. So that would mean that the next sort of live result would be the November decision by the Reserve Bank. And I think that we wouldn't see, even with a reduction, the consistency that the Reserve Bank would be looking for to be able to think about cutting rates at that November meeting. But look, I think the positive thing for the housing market is that with that welcome reduction in inflation, particularly underlying inflation, it means that I think the chat about maybe higher interest rates, which the Reserve Bank hasn't backed away from, is now waning. I think that's given continuance of this positive CPI results, that any thought of the need for higher interest rates is sort of easing. Now, of course, this is just 1 month's figures, so and we are hostage to oil prices particularly. But some of the underlying data was pretty good. Housing costs coming down, housing prices coming down in terms of the CPI prices, and also some positive issues with fuel. But these might be just once-offs, so we need to look to the future. But certainly a very good result there in the short term. And, I think that gives more confidence to the housing market, particularly offsetting the possibility of higher interest rates, which I think is now waning.
Well, I guess this means that the spring season is going to be good for our housing markets. It's very likely that as we report these on a weekly basis in our Property Insiders chats and on a monthly basis on your My Housing Market reports, we'll see Perth, Adelaide and Brisbane really still being very strong for the rest of the year. But that also means that there are some buying opportunities, buying the right sort of properties in Melbourne and Sydney, which still have got moderate growth ahead.
Yeah, this is the point, Michael, that even though we've seen reasonable growth in Sydney and Melbourne's been a little bit of a sideways market, and as I said, Melbourne's a fragmented market, it's still a positive market in the mid to lower price ranges, but it's been that prestige market that's really dragged the chain. But it does, as you said, that prices in Melbourne overall are still lower than where they were 2 years ago. So it is a good buying opportunity. There's, the Melbourne economy still performing reasonably well. It's Australia's second largest city. And to me, it's been a confidence issue. And of course, those issues with the prestige market. And spring's always, that opportunity to consider buying and selling decisions, and it does favour those Melbourne and Sydney markets. And as I said, we're already seeing early signs of positivity for the spring selling season in our big two property markets.
We'll be back again in a couple of days for a regular weekly Property Insider chat, but it's great to be first in the market with your report each month at the end of the month. And looking back, it's actually been a pretty good month.
Yes, it has, Michael. Same old. And, you'd be still feeling pretty good about yourself if you're a homeowner in Perth, Adelaide, and Brisbane, wouldn't you?
Very much so.
Remarkable results, remarkable.
Okay, catch up with you in a couple of days for our weekly chat, Andrew.
Yes, thanks very much, Michael.